Good morning, or no, not morning, good afternoon, everybody. Lots of people registered today, so I will just let people join. Good afternoon, everyone. Gosh, lots of people still coming through. So, um, obviously, today's webinar, we're going to be discussing benefits in kind and also payrolling of benefits in kind. Whilst I'm still waiting for people to come into the group, into the session, I'd love you to introduce yourself on the chat. Let me know kind of where you're based, a little about where you're working. Do you own an accountancy practice or a payroll bureau? Are you working in-house for somebody? It's really interesting to see who we've got on the call today. The chat should be open for you to message everybody. And we also have Q&As enabled as well. So please do feel free to use these. Oh, Millwall Football Club. That's quite exciting. Hi, Claire. I haven't done football for ages, but I used to work for the Met Police and we used to do like the actual policing around all of the Chelsea Football Club and other football clubs in London. So that was quite interesting to do. Not quite the same, but very, very interesting. Lovely. Another in-house for a pharma company. Fantastic. Thanks for coming on, guys. Still a couple of people dripping through. So I will just hold on for just a couple of minutes. Hi, Justine. Accountancy practice, savvy accounting. Fantastic. So looks like we're going to be having a selection of people here today. So this is great. In-house for a university, FD and manufacturing company. Fantastic. So it's looking, just open accountancy practice. Congratulations. Payroll senior for business advisory. Oh, amazing. Accountancy practice. Hi, Peter, and one of our lovely users of FreshPay as well. So welcome to the webinar. Okay, so I am going to get started. As I say, Claire is on the Q&As and she's on the chat. I'm going to close the chat down because I get distracted very easily and I'm likely to start reading what you're saying. But please do feel free to interact with each other on there. And as I say, please do ask questions on the Q&A. We will be coming to them at the end of the session so that I'm not kind of trying to answer them throughout. If there's something specific to something I'm going through, Claire will try to answer it like by messaging you back, but we'll go through all of that at the end of the session. So I'm going to just introduce myself. I am Nicola Hageman. I am one of the co-founders of FreshPay. I also run my own accountancy practice. Now, I'm not here to talk about the software, but at the end, I will give you some tips for streamlining your payroll services. And if anyone would like a quick demo of either FreshPay or the benefits in kind element and the software sort of in general, I am happy to stay on for anyone that would like to have a look at that at the end. And we'll also have a special offer if anyone is interested in exploring FreshPay. However, if you just want to listen to the webinar and then log off at the end, that is absolutely fine. So as well as being a co-founder of FreshPay, I run an accountancy practice based in Bedford, and my other two co-founders are Jenny Gillam and Claire Haynes. So Jenny runs an accountancy practice in Sussex, and Claire runs a bookkeeping and payroll bureau in the Oxford-Northamptonshire borders. Now we've all been in business separately for quite a few years, and we got together online a couple of years ago to form FreshPay. We'd been looking around for payroll software. We couldn't find the right cloud payroll software that met our needs. And judging by the response that we received, not many other people did either. So please do feel free to connect with us on LinkedIn. Claire's going to put our links into the chat now for you. So we'd love to connect with other professionals. So our goal is to make processing payroll as simple, fast, and automated as possible. And this will free up your time to do more of the things that you love, whether that's more payroll or sunbathing on a beach with your laptop by your side. Now, some of you that are working in-house for companies may not get the luxury of being able to work from wherever you want. But if you didn't have to go and do the admin and the painful bits of running your payroll, you have time to be able to look at it properly and make sure that you're adding value to your team. So we do have a Facebook community. So if you're not already a member, please do join. Again, Claire's going to put that link in the chat for you. And there are a couple of questions just to answer, just to make sure that we're keeping just the payroll professionals in there so that we can make it a safe space where you can ask anything that you want, or you can have a rant without having to fear any issues with anyone else. Okay, so without further ado, let's go and have a look at the agenda for today. So we've got quite a lot going on. This is my condensed version of the agenda, but we are going to look at benefits in general. So looking at electric cars, normal cars, and salary sacrifices for them. We're going to look at vans and electric vans, trivial benefits, any other salary sacrifice schemes. Then we'll look at payrolling benefits in kind, and I'll go through the whole process on that. It's almost got its own little agenda. And then I'll look at PAYE settlement agreements as well. So what are benefits in kind? So benefits in kind are benefits that employees received from their company which aren't included in salaries or wages. They're also sometimes called perks or fringe benefits. And the formal payrolling of benefits allows the employers to actually take the tax value of the benefit in kind via payroll during the year. Obviously, if you're not doing that, you can do the P11D at the end of the tax year in the normal way. So not all benefits in kind are treated in the same way by the tax system. Some of them aren't taxed, but others are, and it can be hard to figure out where you stand. So in its very simplest form, when a taxable benefit is processed through payroll, it removes the obligation for the annual declaration via the P11D. If you're not processing it through payroll, you will be required to do a P11D for each employee at the end of the tax year, and then submit a P11DB as the employer. So let's jump into cars. So with cars, unless they're a hybrid or an electric car, it does become very expensive for the employee and the employer to have a company car. The value that's calculated is taxed on the employee's highest tax rate, and the employer will pay 13.8% Class 1 NICs on it as well. So if the car is not electric or hybrid, maybe consider instead advising your customers or your employees to charge the company their business miles at the HMRC approved rates. So this is 45p per mile up to the first 10,000 miles in a tax year, and then it's 25p per mile thereafter. So despite fuel costs having rocketed over the last couple of years, HMRC haven't actually considered increasing these rates, and we haven't seen anything in any recent budgets either. Now, electric vehicles and low polluting hybrids can be a great way of providing a benefit to employees. The benefit in kind rate for an electric vehicle remains at just 2% for the 24-25 tax year and increases by 1% each year until 27-28. So this means that a vehicle with a list price of £50,000 would have a benefit in kind value of £1,000 for 24-25. This costs this costs an additional rate taxpayer just £450 per year. So you can see how this is a really fairly cheap way of giving a benefit such as a car to an employee. Now, for non-electric vehicles, the rates start at 2% and they increase to 37%. If we ended up at the top level, which quite a lot of cars, like the normal diesel petrol cars come to, a car that costs £50,000 on the highest benefit in kind charge would therefore be a value of £18,500. That's compared with just £1,000 for the electric vehicle. So you can see the difference in having an electric car versus a non-electric, and it is really important to consider maybe alternatives if than offering a company car as a benefit. Now, don't forget that with non-electric vehicles, fuel charges will apply if the employer pays for any private fuel, and you must report any new company car provision or a change in company car to HMRC on a quarterly basis. So the salary sacrifice of cars and electric vehicles. There is anti-avoidance legislation in place for salary sacrifice schemes, so you need to work out the value being the higher of either the amount given up in salary or the earnings charged under the normal benefit in kind rules. Now, electric cars and hybrid vehicles with emissions of less than 75 grams per kilometre are able to use the lower earning charge figure instead. Therefore, it's not worth it for cars with higher emissions. So salary sacrifice will reduce your adjusted net income for Having a salary sacrifice will reduce your adjusted net income and your income for child benefit and childcare rules. So if your employee is near either £50,000 or like for the child benefit, obviously that's now increasing, or the £100,000 child care allowance, they can get their employer to provide them with an electric or a hybrid company car under salary sacrifice and can bring their income down below these thresholds. Okay, vans and electric vans. As an employer providing company vans and fuel to your employees, you have certain national insurance and reporting obligations. This includes any van used for business journeys, commuting, or private journeys. The van benefit charge is £3,600, but it can be reduced if your employee cannot use the van for 30 days in a row, or if your employee pays you to privately use the van. And also, it can be reduced if other employees use the van. You're then going to divide that £3,600 by the number of employees, and that becomes the benefit for them. There is also a charge for using fuel for private journeys, and this is £688. However, if you've got a zero emission van, the benefit charge is zero. Now, I was going to talk you through a recent ruling on the Coca-Cola case and the fact that they were going to change the rules on double cab pickups, but HMRC have now reversed the stance on this, so I'm not going to. But it is always really important to make sure that if you've got vans with payloads anywhere near that 1 ton mark, making sure that they are a commercial vehicle and not classed as a car. Okay, trivial benefits. So you don't have to pay tax on a benefit for your employees if all of the following apply. If it costs £50 or less to provide, and that does include delivery and VAT and anything else that you've got associated with that particular gift that you're giving, a benefit that you're giving. It isn't cash or a cash voucher. Now, it can be a gift voucher because gift vouchers are not cash equivalents. So they are not something that you can exchange for cash, and they do have a negligible value. So you can give gift vouchers up to £50 as part of a trivial benefit. It can't be a reward for their work or performance. So you can't give them a £50 gift card because we've done really well this quarter and I think you've smashed your goals. You can't do anything like that. So as long as it's not a reward for their work or performance, that is also fine. And you cannot have it as being in the terms of their contract either. Now, be careful because anything which becomes a repeating benefit would then become construed as contractual. So if you start giving £50 gift vouchers every month, it will start to become something that's expected and therefore will no longer qualify for a trivial benefit. Another thing to remember is that directors can receive a maximum of £300 per annum for trivial benefits. And this does also include if you gifted anything to their children, for example, that would count towards their £300. Now, if you've got two directors that are husband and wife, you then have £600 between the two of them. But just beware that that £300 is there for them and any family members. So, other salary sacrifice schemes. They're not all quite as simple to implement as you would think. So, you do need to alter the contract each time an employee opts in or opts out of a salary exchange agreement. And obviously, the employee must agree to this change. And it's not appropriate for all employees either. You have to watch out for any lower paid employees, as a salary exchange cannot put them under national minimum wage. It can affect their entitlements to some benefits, such as maternity pay. It can also affect the amount that they can borrow on a mortgage, although most mortgage companies are now wise to it and will include some of these as amounts as earnings. So most benefits provided under salary exchange still need to be valued and reported to HMRC. However, the ones that I'm going to list here, or the ones that I've listed here, don't need to be. So as well as saving both the employee and the employer money, they do offer a tangible benefit to employees. So things like payments into pension schemes, employer provided pension advice, workplace nurseries, childcare vouchers, and directly contracted employer provided childcare that started on or before the 4th of October 2018. That's a big sentence. And then any bicycles and cycling safety equipment, and that includes the cycle to work scheme as well. So all of these ones can be done as a salary sacrifice without having to report to HMRC of their actual value. So hopefully that will make their lives a little bit easier. So pension salary exchange. Now, this is a little bit more of a specific for a particular company that Jenny has actually been using for quite a while. So they've implemented a pension salary exchange for some of their customers. Now, she's, say, an accountancy practice. She works with a lot of companies that have got employees, and they use a company called Magi.io. I think that's how you say it. So they organize all the contractual side of things, and they have a financial wellbeing app for employees, which is proven very popular. Now, the app encourages employees to save more into their pensions, and it looks at their whole financial health. They can input any savings, loans, mortgages, and the app gives them a health score and also advice on how to improve their finances. So they do have a partner program, and I have just had a look at it as well, because we're going to be looking at it for us. If one of your employees recommends the company to you as the employer, they would get £100 as a thank you for recommending. So it may be worth having a look as to how you might be able to do that. And if you're an accountancy practice, they do have a partner program as well. So if you are considering having this sort of service for your employees or your customers, it's worth having a look. Now, I don't have any affiliations with them other than like Jenny's using them. I'm looking to use them as well. But Jenny says they're a really great company to deal with and very helpful, and they are providing a great service and of great value to their individual employees as well. Now, obviously, with salary sacrifice, both the employee and the employer save national insurance on the amount that's been sacrificed. And that's where you as an employer would be able to benefit as well. As I mentioned previously, you do need to watch out for high employee contributions for anyone going on maternity leave. Okay, so workplace nurseries. If you provide place for your employees' children in a workplace nursery, you don't have to report or pay anything. Now, to be exempt, a workplace nursery must have the appropriate registrations and approvals. It must be available to all of your employees. It must provide childcare for employees' children or children that they have parental responsibility for. Has to provide childcare up to the maximum age it's registered and approval allows for. The nursery does not have to be at your workplace. It can be in another premises that you manage and finance, as long as they're not a private residence. So this benefit is not just for large companies with their own facilities. There are a few providers out there who will work with a network of nurseries in order to provide this benefit. So this is something that may be worth considering for you and your employees. Cycle to work scheme. So the cycle to work scheme has been around for a while, and it is a salary sacrifice arrangement. Now, to partake in the scheme, you must be 16 or over, and there used to be a £1,000 limit, but this is now unlimited. So the employer can purchase the bike and safety equipment, and then it leases it back to the employee over a minimum of 12-month period. The employer actually owns the bike, so you would need to enter it as a fixed asset in the business and depreciate it. And then when the final lease payment goes through, you would dispose of it. The lease payments do attract VAT, so there is no VAT saving for the employee, but as it's salary exchange, there are no tax or national insurance deductions. Remember that if the employer is VAT registered, they will claim the VAT when they purchase the bike and equipment. So they charge the net amount to the net amount of the purchase price plus VAT to the employee in form of the lease payment. And then they must account for VAT on the lease payments as well as the purchase. If an employer is exempt or partially exempt from claiming input VAT, they are allowed to claim for the purchase of the equipment on the Cycle to Work scheme. Now, there are various Cycle to Work scheme providers who will deal with all of the paperwork and calculations on your behalf. And one of the other things to note is that the employee must use the bike to travel all or part of their way to the workplace. So we're going to have a look now at payrolling of benefits in kind. Now, this is set to be compulsory from April 26 for the 26-27 tax year. So the timing of this is crucial. You need to tell HMRC before the start of the tax year that you want to start payrolling benefits in kind. So you do this online on the gov.uk website, and you will need to sign in as the company's government gateway account. You can't apply for this as an agency account if you are an accountant. The company that you're working for can add you as a user into their account, which we suggest is best practice for accountancy practices, rather than sort of signing in as them into the government gateway, and it does work just as well. The registration is ongoing, so you would need to deregister if you decided that you wanted to stop payrolling of benefits. Obviously, this is until we come to the mandatory element in 26-27. Um, let me go back. Sorry, I've just realized these are in a weird order. So, um, if you miss the registration deadline, you won't be able to payroll benefits until the next tax year. And HMRC, believe it or not, have actually made registration a really simple process. So, what you would end up doing is logging into the HMRC portal using their specific page. I thought I had a link for the chat on there, but if you just Google register for payrolling of benefits in kind, you would be able to find the HMRC link for that. You would then you scroll down on the link and log in as your clients onto the government gateway account. And if you've not registered for benefits previously, you will then come onto the page that then says add a benefit or an expense. You're then going to get a list of all the benefits that you can possibly payroll. And once you've checked your relevant ones, HMRC will give you a check page that says these are the ones you're going to register for. And you would just confirm and continue. And then your registration is complete. So, really simple. It literally takes a couple of minutes. And then you are registered to payroll benefits in kind for your employees. So, HMRC will then ensure that benefits in kind are not added to your employee's tax code. And as I said earlier, your registration is ongoing, so you only have to tell HMRC if you would like to deregister. You can also exclude employees from payrolling benefits by excluding them with HMRC, and you can do that again by logging back into the account, and then you have the option to exclude an employee. You can choose to payroll all benefits except for employer provided living accommodation and interest free or low interest loans. These will still need to be reported on your P11D at the end of a tax year. If you choose to payroll company car benefits, you don't need to submit a P46 car report. So that will get done obviously with the monthly payrolling of benefits. So there is some additional administration and reporting requirements that comes with payrolling of benefits in kind. So you must give your employees written notice explaining to them that you'll be payrolling benefits and what this will mean to them. You have to send this notification by the 1st of June after the end of the tax year. And you should include details of what the benefits are, what their cash equivalent value is, and any details of benefits that you have not payrolled. Any new employees should also be made aware of how their benefits will be taxed and how their tax code may change to remove any benefits from prior employments. You should also let employees know that their tax code may change to remove any adjustment for benefit in kind. At the end of the tax year, employees should be told how much taxable benefit they have received and what it was for, and you still need to report a P11DB and pay for the Class 1 national insurance in the July as you would do under normal circumstances. So the advantages for running payrolling of benefits in kind. So you don't have to produce P11Ds for your employees, although as I said, you still need to produce the P11DB and report the employer's NIC. You don't have to submit the P46 car with any changes to the company car details. The value of the benefits are visible in the employee's pay slips, showing their value during the year. Now, this should be summarised for them at the end of the tax year, so make sure that your payroll software includes these in the year-to-date figures on your pay slips. And of course, you're going to be ready when HMRC makes this mandatory in 26-27. For employees, the employees are taxed during the year in real time, and they don't have a shock when their tax code is changed at the start of a new tax year. Tax codes are therefore easier for them to understand, and tax deductions are more accurate. So the tax and national insurance implications. So employees can end up being taxed twice in the first year and sometimes the second year as well. HMRC will adjust the employee's tax code based on the P11D benefits submitted in the previous year. Now, sometimes they will adjust assuming that they are getting the same value in the current year, so they end up being taxed twice in the first year. But sometimes they're effectively 2 years behind. So if they're then moved on to payrolling of benefits, they will have an adjusted tax code plus being taxed in the current year. So it is important to have consideration for your employees on this. So there are no national insurance implications. The employer still calculates and pays the employee NIC as before. And if a close eye isn't kept on the benefit in kind value, the employee could be over or undertaxed if the value changes during the year. Okay, so reporting requirements for payrolling of benefits in kind. The taxable benefits of any payroll benefits must be added to the employee's monthly pay and reported to HMRC on the period's FPS through RTI or on or before the payment is being made. The benefit should be reported on the employee payslip and clearly marked. And the employers must report the benefits that they have been payrolled on a P11DB by the 6th of July following the tax year, and Class 1A national insurance needs to be declared and paid as well. So, how to calculate your taxable value? You calculate the cash equivalent of a payrolled benefit in the same way that you would if you're including it on a P11D form. Benefits such as medical insurance will just basically be the monthly cost. Cars, vans, and fuel are a little bit more complicated. So, for example, for these ones, you may have to get a calculator out or go and use the HMRC calculator for the cars, vans, and fuel. But you'll be looking at splitting the annual allowance over the full tax year. As I say, HMRC does have a calculator online to be able to go through this, and software such as FreshPay can calculate these for you. So, um, what we've tried to do with our benefits is make it really easy for employers and accountants to be able to go in and record benefits, either payrolling them or P11Ding them. Keeping a track of them throughout the year, making sure that they know exactly what's been allocated to who. And one of the benefits that we have, which I think is great, is if you've got a company car that isn't necessarily always used for one individual, the car is allocated to the employer rather than to the employee. So the car sits there, and when you're ready for that to become a benefit for one of your employees, you just put the dates that you want that employee to have that benefit for, and it calculates their particular cash value of that benefit for that month or for that period. So having that kind of automation really to be able to kind of do the majority bulk of those calculations really handy. So the challenges and pitfalls of the benefits, payrolling the benefits in kind. You do have to make sure that you register before the tax year and tell HMRC what benefits are being payrolled. You still have time right now. We're on the 13th of March, so you still have a couple of weeks before the new tax year if you wanted to start payrolling the benefits. And you must wait until the end of the tax year to stop paying to stop them. So if you've decided it's not for you, you have to wait till the end of the year to stop that for the individuals. You can't just do half years. So you need to calculate the annual cash equivalent, and it can often change without notification to payroll department. So rigorous checks would need to be put in place to ensure their accuracy. If employees are changed from P11D to payrolling of benefits in kind, their tax will be higher for up to 2 years, as their tax code will still be adjusted to take previous benefits in kind into account. You still need to prepare a P11DB and submit it to HMRC. You must notify all of your affected employees to explain with the payrolling of benefits in kind and how it will affect them before the 1st of June or when a new employee starts. Oh, sorry. And you must make sure that all of your employees are again notified each year before the 1st of June. So you need to make this an annual task. So best practices to maintain your records. Keep a list of all your benefits, including the type of benefit, the taxable amount, and the tax paid, and whether you're payrolling it or doing it as a P11D at the end of the year. Make sure when they're payrolled that all of the details are on the employee's payslips. Use a robust payroll software that's capable of handling the processing of benefits in kind. Regularly review your payroll data that you send to HMRC to make sure that it is accurate. And ensure that employees are kept informed of all the payrolling benefits and any changes. Okay, so a PAYE settlement agreement. So an employer can apply for a PSA, payrolling settlement agreement, and this can cover all tax and national insurance due on minor, irregular, or impractical expenses or benefits. Basically, what this is trying to do is meaning if you have a benefit that you are giving to your employees that you do not want them to have to pay tax or national insurance on, you will pay it on their behalf. Now, you can't do it for everything, but there are some things you can do this for. So this is where we're going to go through now. So examples of minor benefits and expenses are, for example, incentive awards for long service. It could be telephone bills, small gifts and vouchers, staff entertainment. So, for example, a ticket to an event or something, and non-business expenses while traveling overnight on business that are over the daily limit. So, we're saying minor benefits. So, just things that are happening on like a day-to-day basis that is kind of unreasonable, or you don't want to have to charge these out to your employees. You don't need to include trivial benefits on your PSA. So if you are paying trivial benefits and they fall within that category, you do not have to declare them on a PSA. So irregular benefits and expenses, these are things that are not paid at regular intervals over the course of a tax year, so weekly or monthly, and they are also things that employees do not have a contractual right to. So an example of irregular expenses and benefits could be a relocation expense over £8,000. So they are tax-free, but below 8,000, but if you're giving more, you could put that on a PSA. Also, the cost of attending an overseas conference, for example, could be on here as an irregular benefit, or the expense of a spouse accompanying an employee abroad on a conference, or potentially the use of a company holiday flat. Okay, impractical benefits and expenses. So these are things that are difficult to place a value on or difficult to divide up between individual employees. So some examples, for example, could be staff entertainment that's not exempt from tax or national insurance, a shared car, personal care expenses. So, for example, hairdressing, and they can be these can be fairly complicated to calculate the value for an individual employee, which is why you sort of roll it up and you do this as an employer instead. So PSAs can be complex to calculate and they can be expensive for the employer, as effectively you are going to gross up the cost and you are going to pay the employee's tax and national insurance, as well as paying the employer's national insurance over to HMRC. Now, there are some things you can't include. So you can't include wages or high value benefits like company cars, or cash payments such as bonuses, round sum allowances, or beneficial loans. You can't put any of those in a PSA. Now, if you apply after the start of the tax year, there are extra restrictions on what you can include. So the application to use a PSA must be submitted before the 5th of July following the first tax year. And there's no need to continue to apply. So once granted, you can continue to use it. The tax and national insurance is due to be paid by the 22nd of October, and it will go against your normal PAYE account, but you will have a separate reference to use for it. There's currently no deadline for reporting, and there are no penalties for reporting late, which is a bit of a strange one. The online forms will do all the calculations for you, but you do need to split the beneficiaries between their different earning rates. So whether they're basic, higher, or additional rate payers. And you also have to split it between England, Scotland, and Wales. So make sure that you've got all the records that you need about your individuals and your employees that these benefits relate to. Okay, so time for Q&A. Stuck to my half an hour, so I'm quite pleased with that. I hope you found that useful. I know there was a lot of information in there. I will be sending over a recording, and we will also send through kind of a PDF as well of any Q&As that have come in. Claire, is there anything on the Q&A that we wanted to go through? Let me stop sharing my screen for a second.
It'll help if I unmute myself first. That would be really useful. There is a couple of questions. So first of all, and if I'm completely honest, I haven't heard of this yet, but somebody mentioned that at the GPA seminar last week, they did advise that agents can register for payrolling and benefits of April 24. I haven't seen anything to that effect. Nikki, have you? So I'm not entirely sure.
No, I haven't seen it.
No.
I think the reason that we recommend that you use it through your client's government gateway account is because it's easier. So if you're trying to register it as an agent, which maybe you can already do then, I just think it's easier to do it directly through the client's government gateway account, because it's literally you log in, you say, I want to do this, 1, 2, 3, done. Whereas I think it's harder as an accountant to do it through your agency account.
I am aware it's not available right now, so it's definitely not at the moment. You can't
Right.
register as an agent, but I just have to say I am not aware of that changing as of April. So I just wanted to mention that. Do we know yet?
I can see quite a few comments around there being some lag in there. I'm really sorry about that. So I don't know if that was for everybody. If it
Oh,
was, well done for staying, well done for staying with me for all of that. So I do apologise if there was some sort of issues with the with the sound. But yeah, a recording will come around. I'll check it. If there's an issue with the recording, I'll just re-record it again for you.
yeah, a couple of people did mention if they were having a bit of a struggle, so I did say that we will get a recording circulated. Another question, do we know yet if HMRC will allow all benefits to be payrolled when obviously the mandatory 2026 requirement comes in, or will accommodation and loans still be excluded from being payrolled? Now, I note that there will be a draft, can't get my words out, a draft legislation from HMRC later this year. So I'm presuming at that point we'll get a little bit more detail about exactly what is and what isn't involved. What happens if we have unusual benefits that may be a one-off subscription?
So you could have I mean, so you could put that in as just a payrolling of benefits. So if you've already registered for payrolling of benefits, you could add that in as a one-off benefit in the month. If you're doing it as P11Ds, you would just add it in as a one-off benefit on your P11D. If you're talking about having a PSA, so if you've already got that in place, you could potentially put that into your PSA, providing it fits within the rules around what you can and can't put through. I think that's right, isn't it, Claire?
Yes, yes. Is the PSA the best way to declare the costs of employer provided holiday accommodation?
So I think that was one of the examples that I had in there. So I can't remember what the description of it was, but it's basically let me just have a look. I think that's classed as impractical. Oh, where did my notes go? Where are they? So irregular benefits, so things that aren't paid at regular intervals. So, for example, the use of a company holiday flat. So, yes, what you would do is you'd work out what the benefit of that holiday accommodation was for the employees, and regardless of you'd work out who it was that took it, and then you would put that on a PSA.
Yes, sorry, I'm just flicking through.
So there's one on here about, is MoneySoft an alternative to FreshPay? FreshPay is an alternative to MoneySoft. We are cloud-based. MoneySoft is purely desktop. So we're in the cloud. We've got a lot more automations and things like that. We're not doing a comparison between the two, but it's aimed at a different type, I suppose, of bureau. It's aimed at people that are looking for cloud-based, fully collaborative payroll software. So yeah. Was there any other questions on the Q&As? I can't see any in the chat.
Yeah, sorry, I'm trying to flick between the chat and we have agent fees as well. I'm presuming you're referring to a
That's
benefit,
yeah.
Claire?
I think the way that the benefits would work is you have to work out what the cash equivalent of a benefit of basically of providing whatever it is to your employee if they
Mm,
went off and did it themselves. So that's where your cash equivalent works. There may be a specific for this particular benefit that you have, and maybe HMRC has something on their calculator that would help you kind of put the figures in and sort of do that calculation.
mm.
But yeah, I would imagine it would be potentially included, because you are incurring that cost on behalf of the employee, and therefore the benefit is that full amount, I would imagine.
Yeah. So somebody's noted, would you mind sharing the fees and costs for using FreshPay? Just to let you know, obviously Nikki did say if anybody was interested, we can put a demo on. We do have them twice weekly. So again, please feel free to book on one of our demos if you're interested. But we have all of our pricing on the website. So go to freshpay.cloud. Fully transparent, all of the pricing's on there, and there's a little calculator where you can put in your number of employees, etc.
Yeah.
So
And
that's
we do cater to bureaus. That is what this has kind of been built for. But we do also have a number of single employers on there as well. So we just charge per employee if you're just a single employer. If you're a bureau, it's per employer. So it's fixed fee per month. But yeah, please go and have a look on there.
and there's one just coming. I'm just having a look. Our employee.
Michelle, you've got your hand up. Would you like to actually speak, or would you like to put it into the chat? I'm happy to unmute you if you would like to join us. Let's just see. Let me see whether I can. Right, I've allowed you to talk. So I think you can unmute yourself, Michelle, if you would like to talk at the moment. Oh, click too many buttons. Okay, fine. I don't know how to remove you now. Remove permission. There you go. You've gone. You can no longer talk. Okay. Anybody else got any other questions? Okay, so I think we've got everything. I will keep a track on it as well. But what I do have is some conversation. I have some slides around how to streamline your payroll. So I would love to show you that. And then afterwards, I say I'm happy to have a demo. Now, if you don't want to stay on, absolutely fine. I'm not holding any of you ransom, but please, I would say I would love you to join us for this. Let me just share my screen again. Okay, so we can see that? Claire nod.
I
Yeah,
can,
awesome.
yes.
Okay, cool.
Yeah.
So, as I say, I mentioned at the beginning that I'm one of the co-founders of FreshPay, along with Claire and Jenny. And as I said, we met online in a forum talking about cloud payroll software, and that we couldn't find one that actually suited our needs. So myself and Jenny actually currently run payroll in-house for our clients. I used to actually outsource it to to a payroll bureau, and Claire is actually a payroll bureau. She runs a payroll and bookkeeping business. So between us, we've got a wealth of knowledge and experience, and we can come at it with lots of different ideas and lots of different angles. And we know kind of how best to serve people who process multiple pay runs, or who need to have multiple people accessing information at a time. So I would say the most important step that you can make towards streamlining your payroll processes is to move your software to cloud payroll software. And I'm going to show you how this is such a huge benefit. So most accountancy firms and a lot of businesses are now in the cloud for most of your software. And normally the one thing that's left behind on desktop seems to be payroll. So I expect that, so most of it seems to be payroll that's left over. So the solutions that were out there were either not great for multiple payroll processors, or they were hugely expensive, charging per payslip, which is tricky for us as accountants because we haven't got any control over what our clients want to sort of have processed each month. So how many employees they have. So we put together a fixed fee pricing model. It's based on per employer, so you know exactly how much you're going to be paying each month. As I said before, we do have single employees, which is per employee. It's not per pay slip, so if you do weekly pay runs, it's still per employee, not per pay slip. It just gives you a bit more. It gives it a bit more fixed, so you know what your cash flow is going to look like from month to month. You've got a fixed fee coming out. So you should also consider your data backup and data security. So if you're using a desktop product, you need to consider all of this. But if it's in the cloud, you can rely on your software provider to get this covered. And lastly, being able to work from any device from anywhere. This is a real bonus nowadays. So last year, so Jenny's payroll person, for example, had to take some personal leave, and they took, unfortunately, was over payroll processing date, and other team members could help. So it meant that Even though Jenny was still needed, she could log in from her holiday on her iPad, and she was able to work on that payroll, even though she wasn't expecting to have to. She could go and work on that payroll. And it means that you don't have to have a laptop or a desktop for your payroll software that's people have to log into, and you have to physically be in the office. So it's really, really important to be able to say, have the flexibility, have the opportunity to be able to access your pay run at any point. Um, and I mean, so I actually run because I run my own personal company's pay run. I do that still, but my team run my clients. But I ran it one year from the beach. Well, sitting around the pool on holiday, because I'd remembered that I hadn't put something through. So I just logged in and I changed it way before pay date, but I knew that it was done. And it just gives you that peace of mind that if you've got anything that you need to look at outside of the day to day in the office, you can. So another of the biggest limitations of desktop software is that only one person can access data at one time, or it causes corruption and potentially lost data. So with cloud software, it isn't an issue. You can have various different people all working on the same data without any corruption issues. And another benefit is being able to share this information with employers. So they could potentially input their data directly into the software or approve it within the software. So there's much fewer sort of Excel spreadsheets flying around. And visibility is really important for all payroll stakeholders. So, yourselves running the payroll, any people in your payroll team, employers, employees, everybody needs to be able to have access to one true source of data. And say having it on cloud just means that everyone can have that flexibility. So, another way to streamline your payroll is to get automations built in to your software. So, with built in calculations and automations, the time that you spend running the payroll can be freed up so that you can put yourselves to more use, either doing more payroll or answering questions or supporting your team or supporting your clients, or potentially even working in other parts of your business. So a lot of time is spent doing manual calculations for starters, leavers, and then mid-period pay changes. Um, you've got to double check it, triple check it. You want to make sure that obviously it's right first time. So imagine if your software performed all of these for you and how much time that would be saved. So we run around 80 payrolls, and we used to spend a lot of time returning to each company file on payday. So even the simple things like a director's pay run, for example, we know that that's the same every month, but we have to go in on payday to send the RTI. On a normal payroll, we have to go in, send the RTI to HMRC. We have to send the pensions over. We may have a situation where we've got new people on a pension, which we then might have to wait 24 hours before we can send the contribution schedule over. And then we've got to wait before that to be approved before we can then request the direct debit. So all of these things, emailing pay slips, etc., downloading the pension reports if it's not automated. We'd have to keep a close eye on all of this, and we'd have to manually go in and do it. And it might only be 1 or 2 minutes per company. But if I'm running 80 pay runs, that's like a few hours potentially every month that I could be saving by not having to log back in and send things over to HMRC. So now our payroll software does it all for us. All we have to do is check on our dashboard to make sure that make sure there aren't any errors or any sort of submissions that didn't go through, and that everything was like where the process was at any given day. Um, our software also automatically assesses employees for pensions. It sends out pension letters, and it can download and automatically apply any tax coding notices and student loans from HMRC directly into the software as well. And it also reminds us when our automatic re-enrollment is actually due, so we don't have to worry about keeping this on a separate file. So if we save 2 minutes per payroll, and I think it's probably a lot more than that, that's 160 minutes per month, 1,920 minutes per year, and that's the equivalent of 32 hours. That's nearly a whole week every year that we are saving by not having to do these manual calculations. So, with the same resources, you could potentially run another 5 payrolls each month, which could bring in additional revenues of like £400. So, just by reducing the time you're spending on admin and of the manual calculations within your payroll software, you can bring more clients on and make more money. And integration. So, this can save a huge amount of time and can help eliminate human error. So if your payroll software integrates with your accounting software, for example, you don't have to prepare a journal each week or each month. The software can do that for you. If you organize payments on behalf of your customers, maybe with a payment provider such as Teleroo, uh, if your payroll software integrates with it, the payments can be sent over at a click of a button. It's fast and means no more errors. And if you don't currently offer this service to your customers, maybe you should consider it. It is something that's really important and helpful, and it's also a great additional revenue stream. And pension companies, they love having an API integration with payroll software because it means the data gets transferred automatically and correctly, and it's so much easier than updating a CSV file each month. And then visibility. Now, this saves time by reducing queries. If an employee can see a breakdown of their pay, they can see all the records that have been held, and they can see their pay slips for the last 6 months. It's going to save time in queries being raised. And similarly, when employers are able to see the payroll, they can answer a lot of their own queries. Can you see at a glance where you are with all your payrolls for the month? And if you have a workflow dashboard, you won't miss a payroll again. And if you've ever outsourced your payroll to a payroll bureau or you're an outsourcer for other accountants, you know that often the person in the middle has no visibility of payroll, which is a real headache for both the outsourcing accountant and the bureau who's running it. True visibility makes a huge difference to those stakeholders and takes the stress away from running payroll. And then my last point is about switching between tax years. This is another important feature that you should be looking for when reviewing your payroll software. Do you have to open up a different file or even a different piece of software in order to switch your tax year? The extra time that this takes, especially around year end, is a source of frustration, and it's also such a waste of time. And if your software lets you seamlessly transition between tax years and report on dates crossing tax years, imagine the freedoms that you could feel. You'd be able to run your reports for your company year end to your company dates rather than having to go into two different systems. So again, thank you for that. Some ideas around streamlining your payroll. I can see a number of you have stayed on. Was there any more questions that came in whilst I was doing that? Let's just have a quick look. I'm just gonna, Claire, if you can just jump back in, my throat, I'm just gonna have a quick drink.
Yep, I'm here. So I'm just finding.
Sorry, I've obviously talked too much. My throat, I feel, you know, when you've got a cough that's just about to start.
There's a very long question here, so I'm just running through it. Just bear with me.
Okay, let me have a look in the Q&As then, because I've got a couple in here.
Okay.
Is a year-end reconciliation the best approach to manage mid-year changes? I'm not sure what that means, Oliver. If you're still on, if you could reply again, because I'm not 100% certain what that refers to. So I've got an anonymous one. I'm currently trialing FreshPay.
Yeah.
I'm very impressed. I'm going to just leave it there.
That's what I was
Okay,
just
only issue I can
reading.
see for my practice is I've got a few clients that are portal averse and will not sign up to the employer portal. So you can email reports. You can email pay slips to employees. So that's already in the system. And we're currently enhancing the employer portal, and you'll be able to email password protected reports to employers as well. We've got a whole big project that's ongoing at the moment about customized reporting, and that is all part of it. So you'll be able to send custom reports, a little pack, like so certain reports to clients on each month. I think that answers the whole of that question.
Yes, it does. Yeah.
Yeah. So yes, so you will be able to do that, and you will be able to do that. We're hoping within the next couple of weeks,
Yeah,
maybe a
it's being
month.
worked on as we speak, isn't it? So
Yeah,
we're
and it's
getting kind of,
almost done. It's
yeah,
almost done.
yeah. So we should definitely know in the next couple of weeks is exactly when that's going to be ready. So yeah, we can let you know.
Can you put work-related non-cash vouchers through a PSA regardless of the total amount, or do they need to be payrolled or added to P11Ds? I think you can. I'm trying to think of the I don't know, Claire, do you know off the top of your head?
I don't, if I'm honest. I'm not
No,
sure on that one.
let me just see, because I think we talked about.
Yeah, I think he might have covered it, so I think that question might have come in.
Do you want to see if there's any others, and I'll just have a look back through my
Yes, I
notes?
am. I'm just flicking through the rest. There's no more on the Q&A, but there's a couple of things that come from the chat. So Oliver, do you have automation with all pension companies? Or is it limited? So at the moment, we use Pension Sync to do our submissions, which covers the 6 main pension providers, which I noted on the
Nest, Now, People's
thank you.
Pension, Aviva, Legal and General, and Smart.
There you go. She knows them all off by heart. There you go. I always
Boom.
have to go in good they were. So yes, it covers all of those. And do you do pension assessments? Yes, that's all done automatically within the software. So it does all of that side of things. And as Nikki did touch on, you can also automate the sending of the pension letters to the employees. It'll go straight to the portal or emailed if they don't have access to their employee portal. So I think that's us up to date with all the questions, Nikki.
Lovely. I'm just going to put in, because I meant to have the link on. If anyone would like a demo, we are running one. What day is it today? Wednesday. Tomorrow,
Tomorrow, 3
more
p.m.
3
Yeah.
p.m. tomorrow. If anyone would like to join us, let me put it in the chat. I can't find my chat now. Where's everything gone? There we go. Right. There's a link to a form in there which will basically send you an email, and it will let you book directly on there. I'd love to see some of you on it. I did mention a special offer. So we do offer a service, a migration service. So if anybody wants us to help support them getting set up on FreshPay, we do offer that as a service for you. If anybody took a demo and a free trial and requested a migration within the next 7 days, we can do that at half price for you. So it's £15 normally for an employer, £5 for director only, and we would be able to do that for you at half price for you. And that's valid for multiple pay runs in a bureau, or if it's a single employer, we'll be able to help you get that set up and running as well, so that you can run from April. I don't think we've got any other questions, nothing that I can see coming through. In that case, thank you ever so much for joining us today. I would love to keep in touch with you all. You will be getting an email from us. We won't bombard you, but yeah, I'd love you to go on, Claire. What are you going to say?
I've got just one more question that's just come through, and they put it in capital letters, so I think we're rushing to try and get. And I want to. The reason I want to mention it is because it's really, really important when you're going through new software. They say, "What about the customer service from FreshPay?" So we have a real person that is available on the phone, by email, and we are very, very proud to say that we are hugely responsive. So we respond within the hour, and that's available 8 till 6, Monday to Friday. And obviously there's the Facebook community as well, so you can jump onto the Facebook community and sort of, talk, obviously get advice from peers and stuff. But we are very, very proud of our customer service, because we know that is an issue.
Yeah. So that should have been my first thing that we said, because actually the amount of people that have commented on
Absolutely.
you don't know how much you need it until you need it, and it's usually on payday or or something that needs to be sorted immediately. So yes, we're very proud of that. So again, thank you.
There you go.
Okay,
Oh,
we
and
will go now.
yes, somebody's actually put on the chat, I can confirm the customer service is amazing. Thank you. No, thank you. That's lovely. That's really nice feedback. So
Thank you.
great to hear.
That's lovely. Fantastic. Have a great afternoon, everybody. It's been great to see you all. Thank you.
Take care, everyone. Bye.